We have so many options when it comes to the ways we can spend our money, and they're definitely not all good for us.
I would argue that it's not that the knowledge is inaccessible. It's more of like information paralysis.
That's Nate, and this is Money Questions.
That's Matt. This is Money Questions.
Money Questions will answer questions without a sales pitch.
Confidence, clarity, and some tools to make some important decisions.
This is season 2 of Money Questions.
It's wherever you get your podcasts.
My name is Matt, and this is Nate, and this is Money Questions. Who's that?
Hi, I'm Adrian.
Adrian. Today we're talking with Adrian. Adrian joined us late last year. And when I say joined us, he began working. Well, he didn't really begin working late last year, but we began talking late last year.
Yeah.
About life on the independent side. You spent some time on the banking side, and very recently started working on the independent side. So we're going to talk a little bit today about the differences between providing advice in the context of a bank setting versus an independent setting. But perhaps before we get too far into that, we should offer you a chance to explain yourself. Yeah. More so just, why don't you introduce yourself, Adrian?
Yeah. So, again, I mentioned my name's Adrian. Multi-generational blue noser. My wife and I live out in Hammonds Plains. I spent the last 18 or 19 years in the banking industry, which is in a rewarding but challenging journey at times. I live with my 2 young kids. I'm an avid runner. My wife and I have kind of explored around the world before having kids. And yeah, my background in finance was, I'm actually a forest ranger by trade. That didn't quite work out. When I graduated, the subprime mortgage crisis and things started to change. So I jumped into a contact center in a bank, thinking I'd give that a shot. And it was quite the journey, dealing with clients that were experiencing the subprime mortgage crisis, large market volatility.
Were you inbound telephone banking
I was
as well?
inbound telephone banking.
I was too. I made it a year and a half.
Yeah, it was, they pulled us out of training 3 weeks early. There were 4-hour wait times because people's portfolios dropped 40% in a week. And some interesting conversation to have over and over again for 2 years straight.
Yeah.
So that was, it was heartbreaking to listen to at times, but you get a lot of reps in taking 30 or 40 calls a day, helping clients understand the importance of a financial plan and trying to pick up the pieces of not having one during some market volatility.
Absolutely.
I did that for a while, and then I followed my wife to Mississauga. We said wherever there's teeth and money we can go because she's a dental hygienist and she's going to school. And I was a financial advisor in like the Oakville, Burlington area. Yeah. And again, my passion was always providing a plan, helping people navigate the uncertainty of their financial journey. I also had a bit of a passion for like being more proactive, trying to reach people that maybe aren't being proactive with their own financial health. So I spent time going to schools, doing presentations about financial literacy. And that was really rewarding. Trying to get ahead of people making bad mistakes by teaching them early. We then moved back to Nova Scotia in 2012. And I was tasked with launching a financial wellness program across Nova Scotia where I'd work with employers to bring financial literacy to the workplace. That really became my wheelhouse, going to people who maybe are uncomfortable asking the questions, but know they exist. And I had an absolute incredible time exploring every little nook and cranny of Nova Scotia trying to offer that. And from there, I managed a few branches. Then I hopped over to another bank and went regional and then a few national programs. And then here we are today.
Here we are today. So maybe just touch on, because you did work in the capacity of an advisor at the bank.
I did.
Throughout your tenure at various banks. What did a day in the life of a bank advisor look like?
That's a good question because in 20 years it evolved dramatically.
Yeah. How did it start then?
How did it start? You had the ability to spend time slowing the conversation down to understand and try to really dig into what the client's needs were, not just the immediate thing that they came in for. And that might have taken a couple of appointments, But I think the idea was if you slow it down, you're going to win that trust, and in the end, you'll win the whole relationship and loyalty. And that was an enjoyable time. As an advisor, I could do it. As a branch manager coaching advisors, I could focus on the holistic financial needs of the client. As I mentioned, I kind of left the retail world for a little while and went into head office. And 7 years later, 8 years later, I went back into the branch world. And in that time, I felt like the environment changed dramatically.
Yeah, how to change?
Well, the pressure of hitting daily targets were constant. Prior to my departure from the retail world, there'd be discussion once a week. How are the team doing? Is there any opportunities? Towards the end of my time at the bank, it was daily conversations with the team, sometimes several times a day, around targets per meeting, targets per day. And I understand there's an importance to run a business, but I feel like a lot of the reason why we were there was disappearing, or at least the reason why I was there.
What do you mean by like targets and opportunities? I know what you mean, but the listener.
Yeah, that's a really
when
good
you
question.
hear like targets and opportunities, like it's a key performance indicator for a financial institution.
Absolutely.
Yeah.
So the biggest focus would be, the number of sales you could produce, products you could sell. There would be a kind of a lens on every meeting you're in. How many products would you sell in that meeting, or how much volume of sales would you achieve? And that became an ever-growing share of the focus. The nice thing is there were still people that wanted to provide financial wellness, and the best part was the people I worked with, that's why they were there. That's why they entered into finances, because their goal was to provide financial advice to clients. The problem is the expectations, the high level, the high watermark kept rising and rising over the years, until a point that it became an ever increasing focus of how you spent your day.
Yeah, because like when I entered the industry, the banking industry, it was like those opportunities and targets were to keep you on track. And then I was always told through training, like if you keep doing the right thing, all that stuff takes care of itself. Yeah.
And that's where my passion was, right? Back to my story of providing financial literacy to students, to employers, doing the right thing for the client, spending the time to get to know them, understanding their needs, the relationship will come. And that's where the revenue comes from. And I think that's a noble cause, building a relationship and adding value. But I think over time, that focus has just shifted dramatically.
Certainly, and it sounds to me, what I'm hearing at least, is that a disconnect, became apparent and grew over time. That the goal wasn't necessarily to push people towards their financial goals so much as it was to ensure that a project got sold.
Right. And again, reflecting back on my 18 years at the bank, I learned an incredible amount. I met some wonderful people. Most of them are very well intended. When you look at a branch in any town or city, the people there, their intention is to help.
Yeah, help the community.
Absolutely.
Help the community.
Yeah, help add value.
But the strategic focus of an organization isn't made at the bank, at the branch level.
Certainly.
It happens to them. And then they have to do what they can to kind of accommodate. So I think that's where I started to struggle quite a bit.
Right. Yeah, your why was sort of dissipating.
It was.
Right? If you're there to help people and you don't feel as though you have the time or resources to do that at all
be
times.
helpful, or you have the tools to be helpful.
Yeah. So can you talk a little bit about, as a bank financial advisor, like how many people are you looking after? What is the typical branch advisor kind of dealing with in regards to a client base?
That's an interesting question. And that kind of falls back to the level of service that can be provided to the clients who rely on the branches. I work for 2 different banks, some of them fairly large, the branches that I managed. And, the average financial advisor at one of them I worked at, for example, they might have 500 to 700 clients or families assigned to them. That seems fairly manageable. What you don't see behind the scenes is there's maybe 10,000 other clients assigned to that branch that have no financial advisor dedicated to them.
Wow.
Okay.
So you have a lot of people out there that have to be completely proactive for the most part, try to reach out to someone, get an appointment, hope that a financial advisor has more than 6 months experience. And then the servicing of that relationship is quite challenging because the lineup is long for people that actually want to speak with that person. And so follow-up can be sometimes challenging, even with the best of intentions from the financial advisor.
So then everything changed.
Everything changed.
So do you want to talk about that, or?
Yeah.
Yeah. Okay.
It was a big moment of reflection. So I was working at a branch, managing it. I love the team. I still stay in touch with them frequently. And it was in the fall. We were doing quite well as a team. The culture was great. I felt like I was still able to keep that little green patch of what I wanted to accomplish with the culture.
Right.
And my wife was pregnant with our second child, Sophia, which was very exciting. I announced the fact that our second child was coming, and the very next day I was packaged off with my wife's mat leave on the horizon and a baby on the arrival. So,
Yikes.
yeah, it was it blindsided me.
That was a business decision that was made.
It was
Probably prior to.
Well, there's been a lot of shifting. You see it in the news, banks having mass layoffs. So, you never see the whole story, but there was a huge amount of layoffs within the bank in head office. There was a few people that worked in that region previously that were laid off, and one of those individuals was put in my seat the very next day after the announcement because they were packaged off, but they.
So I think therein lies maybe a difference worth highlighting, because there's certainly a difference between walking into a large chain grocer and a mom and pop business to get your groceries, right? The mom and pop business, you're walking in and they might know your name and they might know your kids. And you might have a relationship with them. They might know what you like to eat and whether or not the apples are particularly fresh, and might be able to kind of take the time to point that out to you, right? That's something you don't see in the large chain grocers, right? There's a lot of employees, their bosses, the folks directing things are often not even in the same part of the country. And so there's a distinct difference there between, dealing with a large organization and a smaller organization. I'd like to think that in a smaller organization, someone announcing, the expectation of a new child wouldn't be met with, a layoff notice the following day, right? We don't know that, you can't say one way or the other. But how did you start to kind of come around to the idea of that you might like to go the independent route?
It was a few years in the making. I started feeling like my value, my North Star I wasn't achieving it. So I was kind of exploring options of becoming an advisor, going back to helping Canadians, helping people achieve their dreams. What you can see is, if you watch the quarterly reports within the banks, if you look at their shareholders meetings, not reading the pamphlets in the branches, but watching the shareholder meetings, every single one of the CEOs talk about their number one priority, their key priority is shareholder value.
Yeah.
And when you think about that, if their number one focus or number one client is the shareholders, then who are Canadians? Who are the clients?
Right.
They're the product. They're not the client. And you feel that is kind of evident in the way I think the average Canadian can kind of look at what their experience is like at the branches these days, now versus 20 years ago versus 40 years ago. We can't say, despite their profits constantly climbing, that things have gotten better. The experience has improved. Their accessibility has gotten better. So what I find is that as I seen that happening, I thought at a certain point you have to make a decision on, do you trust your abilities? Do you follow your path? Or do you just kind of settle in? And I guess I have too much energy to just settle in. So it's funny because I don't know if I could have fully made that independent leap on my own without that nudge. So in a lot of ways, I'm grateful that it happened. Timing was terrible, but there's never a perfect time.
No.
Yeah.
And so it's I think I thank the bank for saying goodbye, because it just opened so many doors. And so that's
Yeah, I didn't have the sort of upbringing in banking like the two of you did. I was sort of on another side of the same business, though, in that my job was to visit advisors, both independent and bank advisors, and sort of, talk about the virtues of an investment product that they should invest their clients in. Right. So I represented an investment management firm. I moved out to Atlantic Canada with that job, and I quickly got to visiting hundreds of advisors all over Atlantic Canada. And I remember distinctly being in an office of a bank advisor, and he kind of turned his screen around at one point, and he was explaining his business to me. It was beneficial for me to understand their business thoroughly before putting a product on the table that they could recommend to clients. But he turned the screen around, and it was his dashboard. And this dashboard told him how much revenue he was getting from his book of clients.
Okay.
Right? And that is what he was sort of judged on. His performance reviews were based on the revenue that he was getting from his clients. And I just remember kind of being a little cheeky and asking if there was a dashboard for client outcomes. Right? And how well clients are doing because of the advice that you're giving them. And he sort of looked at me sideways like, no, we don't have such a dashboard, right? And
how do you measure that?
Right? It was a moment for me thinking.
It was your aha moment.
Yeah, it was an aha moment thinking, okay, we're all coming at this from different angles. That's not something that's solely a bank thing, though, because I've certainly met independent advisors with the same attitude.
It's an industry-wide thing.
It's an industry-wide thing, right? So is your focus, the revenue you can generate from the clients you serve, or is your focus the outcomes that you can generate by working with your clients?
That's really important.
Yeah.
Yeah, I really agree.
Yeah.
And that's why I feel there's such an alignment, because, after being packaged off and having my head spin basically for a few days, thankfully I knew Matt for a number of years in my community, and I just kind of reached out to him exploring options. And after having just half an hour conversation, I could see that what I was seeking was right in front of me.
Right.
The similar values, making the right thing for the right customer, providing planning. I think one thing that I'm most excited about in this journey is, in the branch network, you're dealing with a large corporation that has a very specific set of tools, very products, tools, systems. And it's very hard to deviate from that because they're accommodating 5,000 advisors. So as the marketplace shifts, as things change, it's very hard for an organization like that to pivot. So basically the solutions you're getting within the bank network is a very specific small box that can solve basically all your problems, ideally. So, but as an independent, like you and I, the three of us, we can sit down and say, well, what's the best planning software right now? What's the best solutions? What are the best products? And we have the agility to say, in a month from now or 6 months from now or a year from now, this product's starting to fall behind based on the ever-increasing pace of the world. We can make an adjustment to make sure that we keep up with the changes very quickly, and our clients benefit from it immediately. That type of agility I find is fascinating.
Right.
I also really like, the fact that, within the bank network, the investments that they sell are the bank's investments. They make them, they design them, they coach them. The training you receive is from them. Whereas now, we have a global toolbox to pull from, solutions from all over the world, training that is top tier. And if we gravitate towards that, we can dive deeper into it. If that starts to fall behind, we can adjust.
Right.
And we have just a limitless amount of opportunity just to grow and focus our toolbox wherever we feel is the best thing for the client, not based on like a predetermined package.
Yeah, that's huge. And, we're independent advisors, right? And our largest competitor is often the banks, right? I don't think that's a secret, right? And so, well, we chose this path for that reason, and I think when it comes to almost anything in this regard, like a broker, someone that can look at the entire marketplace and try to select the appropriate service or product for someone based solely on their needs and not a limited product shelf can often get a better result than someone with a limited tool belt.
Yep.
Right. And so I think that's one of the main benefits. Like if you walk into a Ford dealership, you know you're getting a Ford.
That's right.
Right.
Yep.
And it's the same with the bank. If you walk into RBC, you're going to get an RBC mortgage, you're going to get RBC insurance, you're going to get RBC mutual funds.
Yes.
Yeah.
Right.
But if you allow it, it also adds needless complexity,
Right.
which you could spiral out of control in because you have access to everything.
Absolutely. On the independent side, you can get, analysis paralysis because there's so many decisions. And maybe that's one of the benefits that we offer is that, we take the time and effort to comb through those options to try and determine what the best thing is for our clients, not what's the best thing for shareholder value necessarily, right?
I don't want this to feel like the advisor, I'm complaining about the advisors. I want to basically deliver the message that, for the average Canadian, there are alternatives.
Right.
Yes.
People that are local, independent, that will solve solutions for you. And also for an advisor who's entrepreneurial, who wants to do what's right for the customer. There are solutions out there. Like, we're open for a conversation. I just think that a lot of times, like Canadians in general, they put their trust in their institutions because for generations they've been reliable. The problem is, I think, over the years is that the banks in general have continuously focused on shareholder value, and they've lost themselves a bit in that journey.
Yes, certainly.
So, banks are good for some people. If you have simple needs and you don't really need a lot of support, then it's fine. But really, even 1% gains over a lifetime of savings can change your life. And like as an independent advisor, that's where those margins add up over time. I think the other thing that I really liked was just about the relationship. Like, if you look at banks, how often do you see a new advisor in the branch network?
Right.
The average tenure is typically less than 18 months. So for an individual who's trying to navigate their own busy lifestyle, they have kids, they have obligations, they have work, and they might only get to go into the branch once a year. Is there a financial plan there with that client? More times than not, no. If they've spent the time to have one, the next time they go in, they're probably seeing a different advisor who does not understand their background. And they're likely just trying to learn their role.
Yeah, they're starting from scratch all over again.
They're starting from scratch.
Instead of picking up where they left off in their last meeting.
That's right. And when I was looking at my futures, I wanted to invest the time to build my toolbox, to really understand the solutions that can craft and really create a future for our clients, remove those potholes, those question marks that can throw people off their financial plan long term. And I think one of the biggest stresses in people's lives today is money.
Yes.
And without a skilled practitioner to help you navigate your investments, your budget, your taxes, your estate planning, you're basically needlessly adding risk to your financial path. And so when I started looking at my career path as saying, I want to build generational relationships with clients. I've only been a few months into the role, and already I'm establishing relationships with my clients that I know I'll be there in 20 years helping them. I'm going to start helping their kids, sometimes their grandkids, to make sure not only are they making the right choices now that pay dividends for the next few decades, but also to avoid those moments that cause so much stress that are completely preventable. I go back to my first real job at the bank when I was helping 30 or 40 clients a day over the phone navigate the financial crisis. That was thousands of reps I did in a couple of years. And the worst part about those conversations were if they had a financial planner that was helping them build skill and knowledge around how to navigate their own financial plan. They were constructing a portfolio based on their age and their time horizon. They were educated on market volatility. A lot of that distress was completely preventable.
Yes.
Yeah, I guess like I take everything that you're saying for granted, or I just haven't like thought about it that way in quite a long time because I've worked on the independent side for like over a decade now, right? So I'm always used to
Where did we leave off from our last meeting? You know, that plan we have, that's the benchmark. Are we better and worse than that plan? Like, are you going to be okay? What are the financial goals, short-term, midterm, long-term? Like, that's sort of anchored in who I am as a professional, where it's different
You're
elsewhere.
fortunate. And I use the analogy of oral health because my wife's a dental hygienist. And I don't think I've even told this one to you guys before, but when we moved to Ontario for a couple of years while she was going to dental hygiene school, and I was advising clients more holistically, not just on the investment side, but with mortgages and credit cards and budgets, I realized that my wife and I's job is very similar because oral health and financial health, there's a lot of similarities where
It's both painful.
both it can be. But what I find is that, you know, no one likes going to the dentist,
This is
but you know you should.
Absolutely, yeah.
But it's not just going to the dentist. It's following their advice. So they'll go in, they'll do their cleaning, they'll floss your teeth, tell you need to floss your teeth more. They'll say, don't eat sugary treats, brush your teeth. And if you follow that plan that they gave you consistently, the likelihood of you having something really bad go within your mouth drops dramatically. But because people are uncomfortable going to the dentist, they deprioritize it because there's other things to do that are more exciting. Maybe they like having their soda, or they don't floss their teeth as much as they should. What happens is over time, things have built up.
Compounds. Yeah.
And then all of a
In a
sudden,
negative way.
you have a toothache.
Yes.
And now it's expensive, it's painful, you have to take time to recover. It was preventable. And I find financial health is almost identical.
Yes.
Most people either don't know where to start, so they avoid it, or they put off going in because they have other priorities, or they've lacked the opportunity to have a real detailed financial planning conversation and have that regular checkup take place.
Yeah,
So what happens is that people put that off and they're coasting. They feel things are fine. But what they don't realize is without making the right decisions year after year, potholes are down the road that they're not even noticing are coming up.
Certainly.
And then what can happen is something goes wrong, they get that financial toothache, and that is far harder to fix than an oral health issue. So, you know, whether it was as an advisor over the phone, having heart-wrenching conversations with adults that were in tears saying, I was going to retire this year, my portfolio is down 40%, I don't know what I can do. Knowing that that would have been preventable. Or being a financial advisor, seeing clients that have accumulated debt and now they have to declare bankruptcy, or they weren't able to save for their kids' education. So now their kids can't go to school. Like those are
The basics of cash flow.
those are painful financial toothaches that were preventable, but they just either lack the person to speak to, the financial plan, the ongoing relationship, the motivation, the compelling reason to sit down and have that regular review. And early on, I just seen that was just such an opportunity. And when I went into the financial literacy programs that I tried to create for employers, I was trying to replicate that over and over again to help people understand that you need a person to talk to. Let's make it more approachable. We can bring it to you, which I feel like that helped. But at the end of the day, even if someone took that path, which is much better than doing nothing at all, you're still dealing with a very limited toolbox. You're still dealing with a lot of turnover. So you're not going to have that legacy relationship over a lifetime to help you and your family navigate the complexities of what is life.
Certainly.
Making sure your kids are looked after when you pass away, making sure you're making the right decisions so your retirement is the way you envision it versus hoping it turns out the way you want it to.
Yeah, that's a great. I love that parallel. It's a great parallel, like between just hygiene in general, dental hygiene, and the kind of long-term financial planning. Thankfully, I've never tried to put my hands in any of my clients' mouths.
Yes.
Yes, exactly.
I put my foot in mine.
All the time. You're flexible. Yeah.
The one other message I wanted to really reinforce is like to clients, there are independent local alternatives that have a much wider tool belt than what you're going to experience at the branch.
Yeah.
One you can develop a long-term relationship with, and you can shop around. Not every independent advisor is going to be the right fit, but the benefit is you're not stuck to a brand.
Yes.
You can meet Nate, you can meet Matt, you can meet Adrian, you can meet Joe Blow down the road and find somebody that feels right, because part of that is that personal connection.
Yes.
And if you get the right person, they have the tools, the skills, the experience to follow you on that journey. That is worthwhile. You owe it to yourself, your family, your children, your legacy to make the right decisions now. And there are people out there that aren't tied. Their primary client isn't the shareholder.
Yes.
It's the client.
Yes.
And I think that's really important.
Yeah, I don't think a lot of people even know the independent channel exists. Like, I'll have conversations at parties or community events, and I say I'm an advisor, and the first question is, what bank do you work for? And I say, well, I'm independent. And they're like, well, what do you mean?
Yes.
Right? Yeah. Yeah.
It's a little known thing. And I think just because the banks are so large and they have such a presence that you think I need financial advice, I'm going to go into the bank.
Yeah.
But I also really want to speak to the advisors. And you and I, the three of us, have spoken a lot about this. There are incredible financial advisors at the institutions. They are skilled, they're entrepreneurial, they're passionate, they're intelligent. They truly care about the clients.
Yeah.
And just like myself, I didn't really know of independent channels when I was younger, or if I did, it was kind of in the back distance, in the background. Well, to those advisors who really want to build a practice, they want to build legacies for their clients, they want to own something they're proud of.
Right.
They can help their clients over time. They can sharpen their skill sets. There is the option out there to go independent. And I know since I kind of announced that I was joining the independent road on LinkedIn, I've had a lot of people reach out saying, I've never thought about this. I'm frustrated. I want to do more. Can we have a conversation? And I think one of the big messages I'd have to say to people is, if you're in a financial planner or a financial advisor at a bank, like, reach out.
Yeah.
The worst thing you're going to have is a cup of coffee and a fun conversation with like-minded individuals.
That's so true. Yeah, we're so willing to talk to people in the industry, right? If they walk in the door, happy to sit down and talk to someone who's
Absolutely.
who's unhappy or who's got great things to say about where they are,
Yeah.
right?
Just like, collaboration of colleagues.
But and that it ties into another important distinction, I think, right? And that's the distinction of an employee versus a business owner,
Yes.
right? I mean, on
I
the
guess we're business owners.
yeah, on the independent side, I mean, at least for us, we're business owners. Like, we're incorporated professionals, right? We own our business and we run our business. At the bank, you're told what brand to use, what paint colors on the wall, what materials you're going to use, what software you're going to use. And we're dealing with that on the independent side, on the business side. We've got to run our business, right? And so I think about the business owner clients that are out there, right? And I think we can relate a lot to those business owner clients because we also run a business,
Yeah.
right? And the fact is,
How do I pay myself? Salaries versus dividends.
Exactly.
Yeah. How do?
And it can be intimidating. Like, for me, if it wasn't for the two of you, it would have been a much more challenging start. It's not impossible, but it's really nice to have people that can help you navigate that journey as an advisor to make sure you can start off and have the right tools, have the right direction.
Yeah.
And so that's why when I talk to these financial advisors that have been reaching out to me, I say, come have a coffee, because we likely have a lot in common, and a lot of things that are bothering you are likely solved right here. You just haven't had the opportunity to sit down and actually have that conversation yet, because like most Canadians, they think finance, they think bank.
Yeah, and it's a scary jump. Like, we talked about that a lot over the past few months. You're essentially, the analogy that I liked is that you're standing at the top of a big kicker or a big jump, right? And you're not sure if that jump has a safe landing or not.
Yeah.
Right? And you're standing at the top of it. You're hoping it does. You think it does, but you really won't know how things will go until you have hucked yourself into the air and you can actually spot the landing.
A little bit of a leap of faith.
So the leap of faith does need to be there, right? And and that might not be for everybody, and that's okay too.
Yeah.
It does, but if you look at the branches, even the average person that's listening to this podcast, you can see the outcomes of the environment that's been created when the focus is shareholder value. 20 years ago, or when we were younger, you had the same financial advisor in the branch for 20 years, the same teller that's been there for 30 years. You don't see that anymore. And there's a reason. And I find that we as advisors in this profession just have to realize that the market has shifted when it comes to where you can be at home and provide this level of service. Yes, they can catch you with a prepackaged solution as an advisor. They can offer you a salary with a little bonus at the end of the year if you do your job. But if you feel like you're uncomfortable and you're not happy, trading your soul for a paycheck is the most expensive transaction there is.
Mm-hmm.
And allowing, and that's why I think we're holding out an olive branch to those individuals who say, I want these things, I just don't know where to get started.
Certainly.
Yeah, like I find the advisor-client relationship works best when it's sort of a two-way job interview, right?
Mm-hmm.
You're trying to figure out if there's a fit, and as the advisor, you're trying to determine, like, can you efficiently plan for this client, and does this individual want to work with you and share timely, relevant information in order to be able to give good advice.
Yes, 100%.
Mm-hmm.
And, you know, already I smile every day when I come home from work, not just from being able to work with you guys every day, but like the freedom of just being able to bring my best self to my clients. I have a client that, a couple that I've been working with, and I've probably spent 8 hours with them already. Mm-hmm. We haven't done anything besides planning. But the outcome of that, when they do follow the plan's recommendation that we've built based on their information, it'll change the future of their family.
Mm-hmm. Right.
And that just, it feels good because financial planning and financial advising is a noble profession.
Yeah, I agree.
It truly is. It's just been kind of eroded away over time with the focus of shareholder value.
Become a little too transactional.
A little too transactional. Yeah. And it doesn't have to be.
Yeah.
You know, and I feel like I'm 21 years old again, just kind of starting my career excited because I can spend that 8 hours and dig into a financial plan. At the branch world, if you said I'm going to spend the whole day preparing for a single client meeting, it's not on the table.
Yeah.
Because there's daily targets.
Yeah.
But what's right for the client?
Yeah, for sure. You could, to your point, changing trajectory, right? Like I love the analogy of sort of a transatlantic flight. And the analogy goes that, you know, you can point yourself at a destination on that flight. But if you're off on your route by just 5 degrees or 2 degrees, you could end up in a completely different destination than you intended to be, right? So often these small changes that come out of the planning process may not seem impactful on the surface, but compounded over time. And having someone there to guide you and set your track correctly over and over again can really make sure that you land where you want to be.
And it's the small things that get lost in the noise of dealing with a bank, like simple things that, like having beneficiaries set up on accounts or successors, preparing for estate transactions, offering segregated funds that on non-registered products. I know that's a bit technical for this conversation, but a lot of those things are either not available at the branch or due to the pace and the experience of the advisor are just missed.
Yeah, or even pulling money out of an RESP in the correct order, so that you're not creating a situation where government grants get clawed back or something like that. Right?
All of those things happen to many people throughout their entire adult earning career and into retirement, and those are preventable things. And it impacts you. We have a finite amount of time to accumulate wealth. We have a finite amount of time to prepare for our retirement. And the wrong turn a couple of times throughout that period changes what those golden years look like, change what you pass on to your children, change whether you can go on trips every year when you want to. And it's the same solutions. It's just going independent, having someone who can actually craft that plan, who spent hours and hours and hours navigating that software to make sure that they tick all the boxes, they make sure all the details are properly put in, they spend time crafting a solution that's thoughtful. Yes, it takes time, but the alternative is far worse.
Yeah, well, and it's outcome focused rather than sort of revenue focused.
That's right.
Well, right, and that approach, I think, is where we feel that by doing that over and over again, putting those reps in, our business really does kind of take care of itself in a lot of ways.
Yeah, it does.
Right. Even coming down to helping retirees feel good about spending their retirement savings.
100%.
Right. If you're incentivized to hang on to assets, and if you're going to lose a bonus if someone cashes in money for a goal, you may think of ways that they could do it another way. You might say, hey, maybe you should take a loan out instead of taking it out of your TFSA, even though the loan might set them back by years and years and years, right? When the incentives become muddy, I think the outcomes become muddy too.
And I feel that's why those really good advisors, you see so much churn in the branches.
Yeah.
It's either just too smothering or too frustrating.
Yeah.
And so you see people leave, and it's a shame because there's a lot of good intention.
Yeah.
It's just the environment in which you're in, it's hard to kind of navigate out of it.
Yeah. Okay, so maybe we should we put a bow on it? What do you think?
Yeah, how do we approach?
I think it's the call to action, sort of, right? This more than any other episode. I think there's a call to action that we need to make, right? But to both clients and to advisors.
Yeah.
Right? Yeah. And so I think what we're really trying to get across here is there is another way. There's an independent channel available to Canadians.
Yes.
That doesn't mean walking into kind of a faceless place where you can't build a relationship, you can't maintain a relationship. There's an alternative to that route, and that route might be the independent route. There's other routes, right?
Yes.
Whether it's DIY or working with a fee-only planner, those are all routes we haven't explored today.
Absolutely.
But, there are numerous routes, but it's worth taking the time to explore those routes.
Explore all the roads.
Yeah, and we'd be more than happy to explore those routes with people. They don't always lead to us working together necessarily, but I think being a well-informed advisor or investor, will provide for better outcomes overall.
Yeah, and it's one of the reasons why we're creating this content, right?
Yes.
To educate and to inform.
Yeah, that's right. How about you, Adrian?
To my advisors, I had the privilege of coaching many in different roles throughout the years, and I just have to say to them, you deserve better. You're capable of more. You can do great things for your clients. Don't spend the rest of your career frustrated, trying to live up to weekly or monthly sales targets, dealing with a limited toolbox, not owning your relationships. Have the conversation. I'm so glad I walked into that boardroom and chatted with you that day, Matt.
Yeah, me too, man.
It changed everything. And yes, there's some fear in it. It's different. Change is always hard, but boy, is it rewarding.
Yeah.
And so have the cup of coffee, have the conversation. The two of you have helped me transfer my skills into this independent channel very quickly, and it makes it much easier. It's not as hard as what you think it is. You just don't know where to get started, but we can help with that. We really can.
What I would say is if you're curious about talking to us, if you'd like to learn more, then reach out to us. By the time this episode airs, you'll be able to find us at ewmbedford.com. You'll have contact information. You can reach out to Adrian, Nathan, or I, and any of us would be happy to sit down and have a conversation or hop on a Zoom call or just have a phone call and kind of discuss the possibilities and answer the questions and talk about the realities of what it looks like to work on the independent side.
Yeah, no, I totally agree. And
That's
eventually a silly repository of content.
Yes. Exactly. Yeah. Listen and subscribe to Money Questions, wherever you get your podcasts.